Hello and welcome to your week in review. I'm Lucas, one of the two founders behind Alpha Wizard. This was a hard week for us and we will walk you through it plainly. Alpha Wizard fell 6.7% on the week, while the S&P 500 rose 2.2% and the Nasdaq added 0.9%. So the market went up and we went down. Zoom out though, and the year still looks strong. We are up 18.1% so far this year against 9.2% for the S&P 500. Our largest drawdown this year has been 12.7%. Our Sortino ratio, which weighs return against downside risk, is 1.7 since we began. Here is the year-to-date picture, our strategy against the S&P 500 since January 1st, with this week in the shaded band. You can see one sharp step down right at the end. Ronnie, over to you.
Thanks, Lucas. I'm Ronnie. I run trading operations. Let me set the scene. The broad market pushed higher this week with the large indexes gaining ground and little sign of stress. Our own book moved the other way because we are concentrated in technology and hardware names that sold off on their own. Now to our risk dial. Every night, the system recalculates more than 20 risk indicators across markets and sets our equity exposure for the next day. As the chart shows, exposure held near 26% early in the week, then stepped up to 49%, where it sits today. That puts us in cruising mode. In plain terms, we go into next week roughly half invested in stocks and half in cash. This dial is time-tested to control how deep our losses can get. It does not try to predict where the market goes next. Lucas will now walk you through the names.
Thanks, Ronnie. Almost everything we hold fell this week. Our smaller declines came from Flex, down 6.7%, Sanmina, down 7.1%, and DigitalOcean, down 6.6%. The deepest falls were harder to watch. TTM Technologies dropped 18.5%, SanDisk fell 16.5%, Micron lost 13.8%. These are all technology and hardware companies, and they sold off together. On the right, you can see how our holdings did against their sector benchmark funds. Our technology sleeve fell 9.6%, while the technology fund was roughly flat. Our industrial and consumer names trailed their benchmarks too. Now, one important point. Those sector and stock figures are the raw moves in the shares themselves. At the whole portfolio level, the hit was smaller, because the risk overlay kept us only partly invested. We averaged about 40% in stocks this week, so a large cash position cushioned most of the fall. That is the know when to break side of how we work.
Thanks, Lucas. Our spotlight this week is Flex. Flex is what people call a contract manufacturer. In plain words, it builds electronics and hardware for other companies, from data center equipment to medical and automotive parts. Here is its share price over the past 6 months. Even after this week's dip of 6.7%, the stock is up about 122% across that stretch. So 1 week sits inside a very strong run. We held the stock until the monthly rebalancing at the end of June. Why did we hold it? Every position carries the same equal weight, so no single stock dominates. It earned its place by passing our systematic screen on profitability and growth, and we recheck it every month. If the reasons to own it break down, it can drop out at the next rebalance. That is how we handle the risk in any single name. Now let me look at the week ahead. It is a busy stretch for economic news. On Monday, the ISM Business Survey lands. That is a monthly gauge of how busy American factories and service firms are. On Wednesday, the Federal Reserve announces its interest rate decision. And on Thursday, we get the weekly jobless claims. A quick read on the job market. 3 high-impact events in 1 short week. These dates are our best estimates, so please confirm them before you act on anything. We will not try to guess these outcomes. Instead, our systematic rules will set our exposure 1 day at a time as the data comes in. Let me hand back to Lucas to close.
Thanks, Ronnie, and thank you for watching. If you would like to follow along, you can copy Alpha Wizard on eToro. There, every trade is mirrored into your own account, which stays fully in your control. You will find our weekly reviews and deep dives in the cockpit, along with our newsletter, the Pit Lane Briefing. One last thing, and it matters. Past performance is not an indication of future results. Your capital is at risk. See you next week.